Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Neena Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Neena Mishra. My guests today are Dave Mazza, Chief Strategy Officer, and Matthew Canterman, Director of Research at Roundhill Investments. We're talking about investing in generative AI, the disruptive technology which has taken the world by storm. Dave and Matthew, welcome to both of you. Thank you so much for joining us today.
Thanks for having us.
So I wanted to start with Nvidia because Nvidia has been one of the biggest beneficiaries of the AI gold rush, and the company is seeing explosive demand for its cutting-edge chips, which are used in various AI applications. And yesterday, in fact, Nvidia joined the $1 trillion market capitalization club briefly, because its shares have surged more than 170% this year. And last Thursday, the stock surged more than 24% because Nvidia's revenue guidance for the current quarter came in more than 50% ahead of Street consensus. So tell us about your thoughts on Nvidia's earnings and what are the key takeaways for investors?
From an Nvidia perspective, I think it's important for investors to remember that this is not an overnight success story, even though, in the last few years, Nvidia's stock has gone up a lot and it's become more of a mainstream name. It has been around. They just celebrated their 30th year as a company, right? So it's not like this was a company founded 5 years ago and all of a sudden it's $1 trillion market cap. They definitely didn't start out as a data center AI chip supplier, right? They started out as a gaming chip supplier. That's where they really, got their chops tested. But, about 15 years ago or so again, not an overnight success, what they realized and what people started to realize overall in technology is that the same types of calculations, the same types of processing that's done by GPUs for gaming is really valuable for processing really massive data sets and workloads inside of data centers. And as we started to see the cloud take off, and as we started to talk about data analytics and then, data science with AI, we realized that GPUs, the same ones we use for gaming, are really good at this. And so at that point, Nvidia also started on a dual track to, within its same family of chips, build even more powerful ones that are dedicated to the data center. And now we fast forward to today, and we're seeing the advent of generative AI. We're seeing the advent of these large language models, which they are what they say they are. They're just very large data sets that require massive amounts of computing power to understand them, make sense of them, analyze them, and extract results from. And NVIDIA's chips are just the most powerful at doing that. But and we wrote a blog post about this. It's on blog.roundhillinvestments.com. It's not just the hardware. It's also the software ecosystem. Because they've been doing data center chips for 15 years, because they've been doing GPUs for 30 years, there's an entire catalog of software, this whole ecosystem of developers that's been built that are trained in utilizing NVIDIA's CUDA software, CUDA. And that's kind of like the default software language for machine learning, for data scientists. And so when you put all this together, again, this is not an overnight success, but they have the right technology, the right ecosystem, the right software at the right time. And that's why NVIDIA is just taking off all of a sudden.
That's an excellent summary. And as you mentioned, their chips are best suited, their GPUs are best suited for training these vast sets of data which are required for large language models. And so I wanted to talk a little bit about the GPU market. Nvidia dominates the market currently. Maybe they have more than 80%, almost 90% share. And I read that Nvidia CEO estimates that the longer-term addressable market for data center GPU is going to be about $300 billion. Now, investors are also looking at other chip companies, but we know that AMD is a much smaller player in the AI GPU market, though they are going to benefit, I think, from the partnership with Microsoft. And we should never underestimate Lisa Su and AMD, such an innovative company. And they are planning to bring out new GPUs later this year. Then all these cloud hyperscalers, they are working on their own chips. So Microsoft, Amazon, Google. So I was interested in your thoughts on NVIDIA's leadership and how long NVIDIA is likely to maintain its dominance on this market.
Yeah, it's a great question. And exactly to your point, you mentioned it, it's from NVIDIA, right? They see a $300 billion total addressable market TAM for their data center, which is mostly their GPUs, but they also sell CPUs. But it's not just the chips, it's the system. So you hear them talk about their DGX H100, now the H200 they just announced. These are basically AI supercomputers, so where they take multiple of their GPUs and package them together with networking and other stuff, and these things cost hundreds of thousands of dollars. So when you add up that whole market opportunity, they think it's roughly $300 billion long term. To put that in perspective, NVIDIA's trailing 12 months, their last 12 months data center revenue is only about $16 billion. So we've got orders of magnitude to go. And even if you think that they're off by 50%, their estimates are too high. And let's be honest, a lot of time these TAM analysis tend to be, too high, up front. Even if it's only 150 billion, it's still roughly 10 times what they did in the last 12 months, right? So no matter how you slice it, there's a huge opportunity in front of NVIDIA and in front of the whole pack. And so, yes, you mentioned that NVIDIA has plus or minus 80% market share of AI chips. They pretty much have all of the market for what we call accelerated compute. That's these GPU accelerated, servers and everything. And so when you tie that together, because these are the technologies that are driving AI development for generative AI, they're in the driver's seat. But if the market gets as big as we think it will, if it gets to this $150, $300 billion market size, there's obviously going to be room for others to gain share. But what I mentioned in the first answer about the software ecosystem, the developer ecosystem, is massively important. If you wanted to run on Google's custom AI chips, they're called TPUs, tensor processing units, you could literally go to Google GCP Cloud today and rent them and train your models on them. And pretty much nobody does that. Because to do that, you have to use Google software stack, and everyone's trained in NVIDIA CUDA outside of Google. And so it's not just the hardware. There's actually been startups that, at least on paper, they claim to have more powerful chips than NVIDIA. But no one's been able to crack NVIDIA's moat because it's this whole ecosystem they've built over 15 years. It doesn't mean that that's going to be sustainable forever. And eventually, if Microsoft is partnering with AMD to bring their own custom chips, if they go out and spend lots of money to train developers on that ecosystem, of course they could do that, and that's a risk. But at that point, NVIDIA is probably going to have grown several times over. I mean, who knows? There's a long way ahead to get to 300 billion from 15 and a half, 16. And even if their market share falls from 80, 90% to 50, they're still growing revenue 10x, 5x, whatever the large multiple is at that point. And so even if there is competition, I would say if competition comes in and takes market share, that's a good thing, because that would validate the market opportunity and really prove that what NVIDIA is doing is on the right path, and what we're seeing in front of us is not just smoke and mirrors. The biggest risk, honestly, I think is going to come in terms of the software side, is if there's going to be traction in the open source community. In the history of technology, open source software has really been, one of the most enabling technologies. And recently there was a push to open source a data science coding language called PyTorch. If that starts to take off, if Google and Microsoft and all these other companies start adopting that, then there's possibly a little bit of a risk to NVIDIA that, CUDA slips as the default, and now PyTorch is an alternative that becomes adopted. And then once you have an open source common standard software stack, then you can start to think about other chips slotting in. So that's what I'm watching most astutely is there going to be competition on the software side to kind of break down the barriers that protect NVIDIA's moat?
Now, let's talk about the generative AI market. And we know that this technology is still in its infancy, and investors are trying to gauge like the extent to which this technology is going to disrupt upend the world and create new opportunities across all sectors, and they are trying to place their bets accordingly. So I saw a recent note on your website regarding the market for generative AI. Tell us about it.
Absolutely. So I think where we're at today, and I'll kind of give an overview of where we're at because I think it helps to put the numbers we put out, in perspective. So our research analysis shows that we think that the enterprise software opportunity, so just the enterprise software opportunity for generative AI applications, can be $121 billion of annual revenue within a decade. And we get there mostly just by extrapolating our outlook for overall software spending growth and the penetration of generative AI into everyday enterprise software apps. So whether that's your Salesforce, your Slack, your whatever applications you use, your Microsoft Word and everything like that, right? As generative AI penetrates into these applications, the revenue will inevitably go up. So that makes sense, right? And then the other side of the coin is the consumer side. And this is where it's a lot more opaque and a lot harder to estimate exactly how big it can be, because I'm of the opinion that with these new technology platforms, it's very easy for us to say, oh yeah, this was this big, so the new thing will be just as big. But what we've seen over time is new technologies usually enable new applications, new use cases that we never would have thought of. And those tend to be bigger than anything we could have imagined. So, just if you take, for example, search, which is already a $300 billion market a year in advertising revenue, it's probably going to grow to $500-600 billion within a decade just based on the trajectory of the market. And so we're already seeing today the search business being disrupted by generative AI, Microsoft rolling out the Bing AI search, Google with Bard, right? We expect search globally to be more deeply penetrated by AI technologies. And so over time, that becomes a multi-$100 billion opportunity as well for generative AI search. So just these two use cases alone are several $100 billion of revenue opportunity. And that's just the tip of the iceberg, because to put it into perspective, like I was saying, where we are, we're in the very early innings. And if everyone says this is the iPhone moment for generative AI, and I think that's true. And if you remember, the iPhone came out in 2007. The App Store, I believe, was 2009. And really, mobile games have been like the killer app that's really been the driver of monetization on mobile devices. Mobile games really started to take off in 2012 and 2013, especially when China started to adopt smartphones and 4G technologies. So there was a lag between the advent of the technology platform and then when we saw the applications take off. I think we're in that first moment right now where we're seeing this new exciting platform, and in maybe 1 to 2 years, maybe even less because everything's moving so fast, then we're going to get to that exciting application stage where, just think about it. Like there's mobile games on your phone today that if I would have told you a decade ago, you'd be able to play this massively multiplayer online experience, you would have laughed at me and said I needed a multi-$1,000 computer to do that. But no, you can do that on your phone today. And I think the same thing will be true of AI. I think that developers are going to take the platforms that are being built today and just build these massively impressive applications that we could never really think of. And that's going to unlock, tons of value. And that's what's really exciting.
Very exciting for sure. Now, you mentioned the search market, which has been disrupted by generative AI. In fact, the technology has reignited the battle for search dominance, because this is a market which was dominated by Google for many years, more than a decade. And then Microsoft announced the integration of GPT-4 into Bing and relaunched the new Bing. And after that, Google has announced a series of AI enhancements for its search engine. So tell us about this AI search war and what it means for the future of search.
Search is really interesting because probably for a decade, search was really boring. And it was basically just like, at least in the US, Google has 95% market share. Outside of the US, they only have 90% market share. Woe is them, right? Naver has a little bit of search market share in Korea, and there's domestic players in certain markets, particularly where it's different languages. Obviously, China is a separate thing where Baidu dominates. But overall, it's just been boring, and Google's made a lot of money from it being very boring. And this is the first time in a decade that there's real competition for Google search, and that's exciting for as long as you're not working at Google or invested in Google, right? I mean, it's exciting from a technology standpoint. It's exciting from just there actually being competition in the market. If you're an advertiser looking to buy ad volume, now you have someone else you can go to. So there's a lot of people that are looking at this as something that's been long needed. What's at stake is, as I said before, hundreds of billions of dollars of revenue exist today in search advertising, and it's growing quite rapidly. Digital advertising overall, but particularly search, has been fairly resilient, even given economic headwinds. And we think that's going to continue for several years, and that's in our research, and that's why we think this is such a massive opportunity for generative AI search. But the other side of the coin here is the cost side, and so even though search is exciting, this is new and creative, the cost of running search on AI is magnitudes and orders of magnitude more than traditional infrastructure. Just running on GPUs is more expensive than running on CPUs. And so there was an analysis done by SemiAnalysis. They're a great little Substack blog. They specialize in semiconductor research. They showed that, this is kind of just a thought experiment because it wouldn't happen, but if Google decided to run all of its searches on like GPU infrastructure, the same infrastructure that powers the AI search, they would lose all of their profits. Like all of their gross margin would go away from search. And that's just because of the increased cost. And so it's going to be a slow drip and a slow rollout as to, obviously getting the technology right, getting the results to be, what you want them to be from the technology, but also managing the cost side of it. But I also think it's what we're already seeing is this is also enabling new business models. Up until, recently, search was a free product and and ads was the monetization. But whether it's ChatGPT or, with I think even Bing is doing it, right? You can subscribe and get access to it. It's going to be interesting to see if they start toying with subscriptions longer term. And, maybe, for example, there's kind of like a freemium split model, right? Where if you don't pay, if you don't subscribe, you get access to the free one. It's advertising monetized, and maybe it's an older technology. So, in a few years, we'll have probably GPT 7 and 8 and 9, right? So maybe the free version runs on GPT 7 for Bing, right? But the paid version runs on GPT 9. So you get the better technology, you pay for it, but you're paying for the infrastructure cost of doing that too, right? And so I think this is going to be quite interesting, not just from a technology, but from, but I think the cost side of the business for both Google and Microsoft here, and anyone else that enters, but then also the ability to experiment with new business models in search that, again, this has been boring and kind of no one's really done anything in search for a decade. And so let's see what happens. It's quite exciting.
Right, from boring to very exciting for sure. So I also wanted to talk about some of the biggest beneficiaries of this AI gold rush. And chip makers are currently seen as the most obvious winners because these are the picks and shovel companies. And then AI that feeds on massive amounts of data, requires immense computing power and cloud services, and it would also require massive billions of dollars of investments. So maybe big tech companies are also being seen as winners from this AI gold rush. So what are your thoughts on companies that will emerge as winners from this gold rush AI race?
Absolutely. So right now, the way that we kind of look at the generative AI market, we look at kind of four buckets. One of our theses at Roundhill is kind of the traditional GICS sectors, BICS, RICS, whatever sector breakdown you choose. They don't necessarily reflect the modern economy, and so we don't adhere strictly to like tech hardware, communication services. So we look at four buckets of companies that we've defined It's the AI infrastructure. So that includes your semiconductors, your server makers, your networking companies. We look at what we call AI platforms. This is like the Microsoft, the Google, Baidu, the companies that are building the platforms on which others can build applications leveraging generative AI. So they have their own cloud infrastructure, their own language models. And then we also have enterprise software companies and then consumer software companies. And so we look at it across those vectors because we think that those are the types of companies that are going to not just benefit from generative AI, because pretty much every company in the world is going to benefit from generative AI. These are the companies that we think are driving the development of and commercialization of generative AI tools and technologies. And that's why we focus on them. And so, we talked about Nvidia and AMD as semiconductors infrastructure. There's networking companies like Arista in that bucket. If we look at the platforms, I mentioned a few. We look at the enterprise software names. You have the likes of a Salesforce, right? And then on the consumer side, you have companies like Nice Systems and a few others. So that's where we focus, because we think, again, if when you take a step back, one of the amazing things about AI and what we think it's going to do to the global economy is it's going to unleash this wave of productivity. In the last 12 months, the only thing we've talked about in markets is cost cuts, particularly in tech, right? Layoffs and cost cuts. It's the year of efficiency at Meta Platforms, according to Mark Zuckerberg, right? And so AI, generative AI, could be one of the next great technologies to unleash the next big wave of economic productivity. Goldman Sachs thinks that it'll make knowledge workers 25% more efficient within a decade. And so when you start to think about it affecting every company, we have to be a bit more nuanced and a bit more focused in how we think about, what types of companies that we really think are going to benefit the most. And I know Dave wants to hop in with a few comments as well.
Thanks, Matt. You hit the nail on the head. There's sort of some obvious winners that are emerging. Of course, I think Nvidia and the way you talked about their moat always fascinates me, particularly when thinking about that maybe attention is just being paid for the amount of work that a company like that has been putting in and being ready for this to happen. And there's a handful of others, smaller names that folks may not be as familiar with that are also really beginning to offer transformative exposure to the space. And some of them may be beginning to be household names in the space, like a C3 AI or a SoundHound AI, what have you. But there really is others that are not just providing the chips in this case, which are the picks and the shovels, but whether it's the components that are going into that or the use cases to make these applications actually work for consumers and enterprises is what's really exciting to me.
Let's talk about your ETF now. It is the first pure play ETF focused on generative AI, the Roundhill Generative AI and Technology ETF with a great sticker symbol chat. So this made its debut last week. Perfect timing for the launch. Tell us a little bit about this ETF.
Yeah, no, happy to do so. And the idea behind chat is to provide that pure play exposure to companies at the forefront of generative AI. We know artificial intelligence has been in the vernacular for some time. There is a handful of ETFs that are either powered by AI or providing exposure to companies involved with it. But most of them are robotics tilted or focused on humanoids and other AI uses in different ways. There was a gap with generative AI. And I think the fact that ChatGPT became the fastest app to surpass 100 million users shows the ease of use and ubiquitous nature. And that's the killer app here, and why some are saying something like generative AI could become as broad-based as the internet itself or the iPhone. And so chat today offers exposure to around 30 companies that are at the forefront of generative AI across all the different pillars that Matt was discussing. So you're going to have exposure to platform companies, infrastructure companies, enterprise software, consumer software, and it's global in nature. So around 70% of the portfolio is in the US, but a healthy about 24, 25% in China, and then a handful of other companies. Over time, I would expect investors to be looking to see a portfolio between 25 and 50 names across the market capitalization spectrum so that investors can get exposure to names like Nvidia and Microsoft and Alphabet and AMD that are at the forefront of this and are well known, but also some of those other companies that are not as well known or providing just a component that has the potential to transform a particular sector or industry.
So this is an actively managed ETF, and I'm looking at the top holdings: Nvidia, Microsoft, C3 AI, Alphabet, some of the obvious beneficiaries of this AI race are there. And you mentioned that there are many other international companies as well. I do see some companies which are not very well known. Our listeners may not be very familiar with those companies. So could you please talk about some of the holdings that are not very well known, but you see a lot of potential in them?
Yeah, happy to do so. Before I do that, let me just touch on how we come about these names, because this is an actively managed fund. It is managed. The security selection process was developed by Roundhill's investment committee, and one of which that, again, when we're thinking about a space as nascent as generative AI, where there is, again, just really only a few companies that I think anyone who's interested in investing would recognize as leaders there, was important for us to develop in a robust way. So the first things first is we look for what we call a transcript score. And that's companies that are in their corporate filings, in presentations, other publicly available documents, are discussing generative AI or related terms and technologies. But we pair that with what we call the sector score. And there is where we're providing that quantitative framework to identify, are companies not just talking about it, but are they spending on it? Do they have revenue that's coming from generative AI today, or are they investing in projects through R&D that will be exposed to generative AI in a material way? So names that I think are exciting that folks would find with material weights in this portfolio is a company like iFlyTech. This is a Chinese listed company. It's one of the leaders in conversational AI in China. And they actually have their own large language model and chatbot offerings today. A company which is listed in Hong Kong, which is SenseTime, another leader in China. This is really focused also on AI. They have their own large language model as well, and really building a suite of other applications that can be used in the generative AI space. But even a name like Duolingo is in the portfolio. This is probably best known for online education, but they're leveraging generative AI for use in custom learning content and just to enhance their existing product offerings. So to me, that's a great company example, because it's a name that some folks may be familiar with for sort of a narrow offering, but is an early adopter of generative AI that could transform their business and really actually may help them continue to differentiate from some of their peers that may actually be left behind because they're not focused on this space as much.
Excellent stuff. Congratulations on the launch, Dave and Matthew, and thank you again for joining us.
Thank you.
I hope you enjoyed the discussion with Matthew and Dave about generative AI and the Chat ETF. And as we mentioned, Chat is currently the only ETF focused on generative AI. If you want to look at the broader AI theme, there are many ETFs that are worth a look, and all these ETFs have seen a lot of investor interest as well as asset inflows over the past few weeks. Now, as Dave alluded, most of these ETFs provide exposure to AI as well as robotics companies. The one which is most popular is by Global X. It is the Global X Robotics and AI ETF. Ticker symbol is BOTS. There's one by ROBO Global. the ROBO Global Robotics and Automation ETF. The ticker symbol is ROBO. These are the most popular products, and this one by iShares. The iShares Robotics and AI ETF, the ticker symbol is IRBO, which is one of the cheapest products in this space. Now, ROBO Global also offers an AI ETF, which the ticker symbol is THNQ. And GlobalX also offers another ETF which is focused on AI only. The ticker symbol is AIQ. And I looked at the best performing product year to date in the space. It is a small ETF by TrueShares. The ticker symbol is LRNZ. Technology, AI, and deep learning ETF. And this, as I mentioned, is the best performing product in this space year to date. And that is mainly because of its huge exposure to Nvidia. But it's a small ETF, has about 19 million in assets. So be a little bit careful if you want to trade this ETF. Thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcast. Also, make sure to subscribe so that you do not miss any episode. If you have any comments, questions, or suggestions, please email podcast@sachs.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.